What's up everybody, Tom here with another video. Well, yesterday in the stock market was a flash crash through hypergrowth stocks. 10, 12, up to 15% discounts in some key areas that have been very hot right now. In this video, we're taking a look at our technical analysis of some of these stocks, along with the S&P 500, NASDAQ, and Bitcoin. Lots to go through, stay tuned. Well guys, what an amazing last 24 hours in the stock market, especially around hypergrowth stocks. I don't even think this heat map is going to show us the true story. We had Apple down a lot more than 0.11%. Nvidia was down around 4 or 5 at one point. Tesla was getting absolutely belted into the open and then had a miraculous recovery. So we'll be talking about that throughout the video. But I think the best place to start is probably going to be to discuss these indices. And I've included the Russell 2000 in our discussions moving forward as well, because I think this is very, very, very important to retail traders out there that are trading these hypergrowth stocks. Russell 2000, of course, the small stocks in the market right now. Now, let's take a look at what happened yesterday. The open happened and it was brutal for the Russell and brutal for the NASDAQ, specifically targeting, I would almost say, ARK-like stocks, that is Cathie Wood style stocks. TDOC was down incredibly hard. Tesla was down massively. NIO was down as well. And that was quickly met by some flash panic selling and a strong recovery, a second dip, and strong into the end of the day. Now, when we look at our technical analysis for the S&P 500, you'll see the key point that we saw on the screen, which was around that 3,800 level that was reached by the S&P 500. And when that was reached, it seemed everything just suddenly changed. That really big flash crash that caused in the morning was suddenly gone. And then Wall Street and everyone else bought up into the end of the day, with actually the NASDAQ ending only 0.22% down. Taking a look at the sectors, it's not going to show us much because the recovery was there. We can see that XLY, as in a consumer discretionary, was down quite hard in the morning, and so was technology. The two hit sectors right now, and they've been the two that have performed the best when you look at a 6-month and 12-month sector rotation chart. Now, why is some of this happening? Well, I think a mixture of it is the amount of retail traders. Many people are finding this channel for the first time, and it's really awesome to see so many retail traders like you and me out there investing in stocks, learning about the stock market, learning about growing, hopefully our portfolios to our future. However, many people also follow ARK, and they follow the innovation funds, and Tesla has been a big stock position there. Also, we've had TDOC, DocuSign, all these other ones, Square, etc. And these stocks have all been inflated due to what I call the Cathie Wood kind of bubble hype. And when that happens, when Cathie Wood says or ARK says they've been in a stock and they disclose it, which is awesome, that tends to run specifically with retail traders. And I think this was a bit of a run on calls, getting calls to be expired ahead of the next couple of days when they are expiring in the US, and everything else that's just been happening the last couple of weeks. Hyper growth stocks have gone hyperactive, and now it's time to take some of the money off the table from Wall Street's perspective. And they did it so fast and so quickly, it was a very cunning plan indeed. Also, Fed Chair Powell, of course, that's very important to look at this news. If you're new to the market, you need to know what the Reserve Chairman is saying. And in this case, he's basically just continued to say the same thing. We're going to support the markets. It's all good. We've got you. Papa Powell's here. It's all right, guys. We've got you for the foreseeable future. And I don't think they're going to turn the tap off for quite some time, especially when the economy is quite fragile and they're very, very scared about causing any flash crashes in the stock market. It's not in their best interest to deal with that situation. Very short-sighted approach potentially here on the markets. Let's now get into our technical analysis levels though. And firstly, I want to say the VIX, while at 23, is a little bit disappointing. So it is 23.1. I would have hoped that the VIX would have been a little bit higher in volatility, but the volatility was so sharp and so fast that it barely had a chance to get started. And this is the problem with sometimes trading the VIX. Remember, rolling the VIX contract, very expensive. But from a technical analysis standpoint, did we close above 24? Yes. Did we hope that would trigger into a 28? I guess yes, from a perspective of if you trade this. I don't personally, but if you did, that would be the next level that you would have hoped for. And then that break could have caused a movement into like a 37 area here. Now, I'm kind of glad it didn't do that initially. But that particular short, sharp attack on the hypergrowth stocks was so fast that if you blinked, you would have missed it. And that's just how sometimes things are with all the algorithms around the markets doing repurchases based on value, etc. Dollar index here, 90 being tested again, the support level on the dollar index. We breached this level, closed below it on a significant time frame such as the daily. We're only on the 1 hour here, and we're going back down on the dollar. Fiat currency, as many people will call it here, is not looking so hot. And at the same time, if this continues to decline, you may also see a rise in Bitcoin. I've noticed here, Bitcoin's doing a very nice formation. So we've had movement down, of course, the flash crash down the 20%, 46 something was around 20% peak to trough. Very standard in Bitcoin and cryptocurrency markets for this type of move to occur. But something's happened here. It's come down, tested the level, it's then moved up. It's then come down again, tested the level, and moved up. And you'll notice here at the time of recording, it's breaking up through this 49,000. And this is pretty key because we have a weak rejection here. And check this out. We go on a 1 hour chart. What you'll notice is not only do we have a bullish hammer coming into this, but there has been no closure points above this 49,000. So from a TA perspective, you could say this is a fully fledged channel. You could take the trend line, extrapolate that out. And as we like to do, we like to proof these things whenever possible in the market. So if we proof it, what happens? It pushes us to the 200 simple, but I do think there is going to be some problems around the 52,000. You can see why. Previous supports could act as resistance. And this area here seems to be where participation will occur. Nice bullish hammer coming in, multiple supports found throughout the Bitcoin trading cycle over the last couple of hours. And things are starting to look like a little bit of a turnaround after that 20% flash crash. Good luck to Bitcoin traders. We'll be live tonight to talk about this and more in about 10:30 p.m. Australian Eastern Standard Time, around 3 hours before the US market opens. So if you subscribe, you'll get an alert for that. But this particular area, very interesting. I'd like to see a close above here, and then hopefully we get a movement into that 52,000 area. Now let's take a look at silver. So silver broke through and closed above 27.80, signaling that there was some strong pressure in silver. And I feel like this still is quite possible, where we move up slowly here towards the 30 after breaking and closing above what is a key resistance zone. We haven't been able to get past 27.80 in some time. We did it with this candle. There was a rejection yesterday during the volatility, and now it looks like we're moving back up. So silver is disconnected from gold, and it's looking strong. Gold, is it looking good? Yes, it is. It's looking like it's actually flagging. If you take a flag of this and you think about this bullish hammer as well and what it's telling us, things are starting to heat up for gold. Now, if dollar index continues to fall, this is also going to cause a huge movement here for gold. Gold could go all the way back up into these previous resistances. That's what a flag is. It's to take the distance of this length and extrapolate that out. A very interesting zone indeed for gold right now. And I do like the flag. I like the setup. Do I think this is strong? I think the problem with this one is there's so many headways. We've got all this noise on the left-hand side. We don't have that on silver. We also have 1830, previous supports, previous resistances to deal with and contend with. So just like it's been recently, silver has been my pick of choice over gold in terms of these two metals. And I guess we've been vindicated so far on that, but things are looking like flags are about to occur. We're about to see a close, and potential strength could be coming back here for this metal. So good luck for gold traders. So let's now begin our stock discussion. I want to show you a few things that led to me thinking that we hit a support yesterday that was pretty keen in these hypergrowth stocks. So Tesla was the first one. We called, or we discussed as a community at this point, that we thought Tesla was definitely going to short fairly hard, and it certainly did. This was the first time Tesla had ever shown a bearish candle confirmation and a pattern in a very long time. Everything else has been a steady incline with strong price points and strong higher lows, etc. So when this happened, we thought 700, 650 was most likely kind of area or zone to go back to. We actually got close to the 600, and it bounced off this 200 simple moving average, or the green line here. A very interesting zone, an incredible bounce. People literally put on around $100 almost on Tesla yesterday. And aftermarket, it was up even more. It was sitting at about a 716 aftermarket. So it completely filled that gap. And you can see that there is a huge amount of purchasing, pent up demand for this stock. Now, what's next for this? It's become hard to read. It's done the bounce off around the area that we thought. What is next? It's come down to the index. So I think that Tesla will need to now create a new story because its crash was so fast that it needs to have all of the indicators and every other technical reason to now catch up with it. Similar kind of companies, Net, Cloudflare. I've talked about this quite a few times. Now, even if you don't like Cloudflare, it doesn't really matter. There's a technical here that happened yesterday. It shorted off to a zone that's been heavy buying pressure. See this zone here around the 71? Also, each time it's hit this area, it's bounced off quite hard with huge buying pressure and momentum. See these wicks? And we talked about this on the stream. So that was reached into the open yesterday. At the same time, we had other hypergrowth stocks. Here's Teladoc coming into a very nice level of previous resistance becoming support. We also had Square doing the same thing. So all of these stocks were lining up, showing us that they were at key levels into the open that are first buy zones potentially in a technical world from these perspectives of hypergrowth stocks. All of this January hype has been worn off, and now we're back to where I guess dip buyers would be saying, I like this stock, I like everything about it. And if you do, that would make a logical first zone of entry. Let's now talk about the S&P 500, what I'm sure a lot of people are interested in the analysis. So we didn't close, and I repeat, we did not close underneath the 20 exponential moving average. We knew when we got this candle, we were in for a show. We had multiple kind of supports that we were thinking would happen. So here is our trend line, and our trend line's been intact for quite some time. That then shorted into the 20. Very standard play that's happened recently. The next point of call, 50 exponential moving average. We saw that happen yesterday. It got just almost to the 3,800, and then it started bouncing off it because we had a disconnect between the hypergrowth stocks and the general value stocks, things like banks, things like energy. They were actually going up, and the rest of the hypergrowth stocks were all going down. So it pushed the market to this point. We saw the Nasdaq hit a 12.8 here. Could this be all that there is left in the market? Well, I think it certainly could be. You take a look at the S&P 500 futures here. It hit the 50 exponential moving average on this one, bounced off it, and you get above 3,900 and you get a close now. We're putting a compelling argument for that is all that was left in the bear bust in terms of the bear movement down here. Why? Because when you close above this bullish hammer, you're showing that we want to return back to the trend line and potentially touch the 4,000 level. Now, we close below 3,800 now. I'm going to send an alert for that for sure. If you get underneath this, where do we go? 37 into the 36, the longer term correction line if it was to occur. Why is that? Because you close below a wick or a low of a candle where there was huge buying momentum. You're fundamentally changing the way that the market's sentiment is. The bearish pressure is so intense that even all the bulls that will be buying off these lows were not enough to hold it up. And that's why wick candles are very important when it comes to reading TA and understanding more about the market movements. Let's now take a look at the US 100. Of course, that bounced heavily, came down to the previous support it hit in January. We see that that was reached literally straight away, fully bounced off. We're now from a 12,750 kind of low up to a 13,252. We're not back to the highs, but this may have been the flash. Again, the S&P 500 is telling us the pickup is there. We look at the daily here. Look at this daily, another big rejection candle showing bullish intentions, and it becomes the same old story. We break through this low here, it's going to be very, very bad. The market will literally correct through that point. It will go down quite hard. But if we continue to hold this level or move to a new high, I would see us going back to test the trend lines, even through this one that go through this point, go back and try to test 14,000. So things have changed a lot over the last 24 hours with Jerome Powell, with the technicals, with the flash crash that happened in the morning on hypergrowth stocks. Pretty much everything's changed, and that's trading and investing sometimes. Hopefully you guys enjoyed this video. If you did, please remember to, of course, hit that subscribe button and alert button. Give us a thumbs up. It does help us out. And I just want to say a big thank you to each and every one of you that's been subscribing and supporting the channels through our live sessions. It means a lot to me. It means a lot to our team. And I can just say that the growth here has been absolutely unbelievable. And it's thanks to each and every one of you. Good luck, and remember, make as much money as humanly possible, but do it with some risk management. Bye for now.